Hey traders, let's take a moment to thank and feature one of our top sponsors, FX2 Funding. If you're looking to get funded, listen up. FX2 is offering traders the chance to trade with up to $200,000 in simulated capital and receive up to 85% of their results. If you're interested in getting started, use the link being dropped in the chat or the link down in the description below. If you pass the evaluation, you'll receive your feedback and gain access to your new account. FX2 allows traders access to a wide range of assets and allows traders to hold their trades over the weekend. FX2 is giving A1 Trading Show fans 15% off the evaluation fee if you use promo code A1Trading15. So if you'd like to learn more, again, use the link being dropped in the chat or the link down in the description below and use code A1Trading15 at checkout for a discount on any of their evaluations. Now back to the show.
All right, guys, real quick, I wanted to just make a little bit of an announcement. I'm just going to do this really quick. Hold on. Got some kind of exciting news I wanted to tell you guys. First of all, check out the check out the cool graffiti theme. I hope you guys liked watching Frank skate around the rink as much as I did. We're just having fun with it. This March, we're going graffiti theme, which is kind of cool, kind of fun. Anyways, I also wanted to make a quick announcement here as we start here today's show. We've got some key market data coming out, which should be big. But I also wanted to really quick draw you guys' attention to a new sponsor on the block. And we're really excited. Anytime we get a new sponsor, it's a big deal for us. Of course, sponsors make these shows possible, but they also offer really cool things to our viewers with great perks. We're currently doing 30% off people who are looking for a VPS. Listen up. This is really cool. So our new sponsor is Forex VPS. Many of you guys have probably heard of Forex VPS. And while I'm speaking about this, maybe Emily or someone from our team can drop some links in the chat for this. But some of the cool things about having a VPS is, of course, you can put your location wherever you want, but you can also trade directly within a VPS. And this can be super convenient for traders who are looking for that opportunity to trade from another place or whatever. They can also, run systems on this. I know a lot of people run expert advisors who use MetaTrader. So if that's something you're looking to do, we've got 30% off. If that's you, if you're the person out there who's like, oh, I could use a VPS for 30% off, A1 Trading 30, that's going to be the code. We'll put that in the chat here for you. A1 Trading 30. That is our discount that we've got currently going on with them. They have uptime guarantee, which is great for algorithmic traders. If you're somebody who trades with robots or systems, this is a huge deal because, of course, having a dedicated VPS means you won't have any downtime. Latency is 1 millisecond or less. It's the fastest execution time out there, meaning trades execute when they want, or whenever a trader wants trades to execute, they execute like that real quick. And they, of course, have wonderful customer support and a great team behind them. That's why we've chosen to, of course, partner up and bring them on to the show. So I'm sure we'll be hearing more about Forex VPS for starters, but I just wanted to announce that exciting new partnership, that new sponsorship that we have, and a remarkable, again, opportunity for people who are looking to get access to a VPS. Again, we'll have some more information about that. Let's go ahead and move on to some charts here today. And again, in the chat in just a moment, we'll have some information dropped for you about Forex VPS. And Chandler, if you need any help with that, Emily can help you out. All right. Oil, guys, does not want to quit. We are still seeing just a massive, massive run here. And this has been, I have been kind of all week talking about the commodities, how I've been very bullish, and I picked up a position at the beginning of the week, and this thing has just done nothing but really move up. We had a sideways consolidation. I trailed my stop loss, and I actually even added into this position size. We're currently up to, I mentioned this the other day, we are up to $2,500 shares of USO. This is the ETF that I use to track the oil market. We're up $7,700 on this trade. Now, let me add, as I always do when I talk about good positions, let me add some clarity. My campaign with oil was not one without some struggle. I went long oil a little earlier before this last week, and twice before that I took losses. Took a small loss, took a decent sized loss on this one, but then this third trade has really paved the way and made up all the losses and much more. So we're looking really good overall on oil. I do like the position. It's been on the Edge Finder's top setups page for a little bit. Finally got the entry that I was looking for. And with that bullish position, going to stay long into the weekend, most likely, unless we see a large reversal today. And there it is, guys. There's the Forex VPS information. A1 trading. I think it's A1 trading. Is it A1 trading 1 or A1 trading 30? Can we just check that? Make sure that's the right code, because Emily sent me A1 trading 30. Yeah. But if you're interested in Forex VPS, use this link. Get yourself a VPS for a super discounted rate. Again, you can put yourself wherever you want in the world, all that sort of good stuff. The other thing I wanted to mention is gold. We got to check on the gold position. Gold has been flying this week. And finally, right, gold has been so boring here recently, but we have been seeing some nice momentum starting to really pick up on gold. And the point I made yesterday about gold was this level here was giving us some trickiness, right? So gold was struggling to break out of this $2,040 an ounce. But what I love about this price action is that we did break out. And not only that, we pulled back, retested that same general area, and then pushed off of it. Definitely like to see that. Really good, strong push here into the open as well, but starting to see a little rejection. And this is what I've been talking about here with this move on gold, guys. Let me pull up the daily chart here. So when looking at gold, what I've mentioned here is that I took this trade, and it's not a huge trade for me. It's actually a relatively small position on my account. Obviously, I would love it to be massive at this point since it's in profit. However, this was a really small position for me. And the reason for that is because this level of resistance is kind of creeping me out in the sense that, okay, if I look at a technical perspective, we've been on a range-bound market on the daily chart for several months now. We haven't really seen a huge break one way or the other. So when I look at the price of gold here and I say, okay, well, this market is sitting at resistance and we are in a range-bound market. The reason I took a smaller size is because I was kind of aware of that on the daily chart. If, however, I've mentioned this too, this is kind of my game plan with the technical side. If we're able to break through this level on the daily chart and retest that same zone, that 2050, 2055 area, I may actually look to add to my trade and build a bigger position. So for those of you guys who are watching gold alongside me, again, I still have my long position overall, but my position size, I'm willing to get a bigger size on this one if we make a more meaningful move. So within the group, I need to ask, or I need to think about this. Do I need to trail my stop loss here on gold? I'm going to use the 4-hour chart. So again, there's the oil signals and the gold signal from earlier this week. We're looking good overall, but I need to kind of figure out, is it time to trail a stop? So what I'm going to do is I'm going to go to the 4-hour chart. And I think the answer is yes, because what we've got here is our entry. We ended up ranging, breakout, and put in a nice higher low. So with that, it'd be appropriate to move my stop loss into profit to lock in case this move does not follow through. So what I'm going to do is I'm going to do that while we're on the stream here, because it's part of my trading plan is to, of course, trail stops when it makes sense to do so. So we've hit a level of resistance. I'm going to trail this stop. So I'm going to say stop trailed here, stop trailed. So that puts us in 2 positions, actually 3 positions right now where we are locked in profit and letting runners run. So can't complain at all. It's been a really good trading week. So stop loss there. So again, this was my initial trade. I'm just moving basically slightly into profit. GLD. So this is where the trade actually is taking place for me. I own the GLD ETF as a trade. So let me really quick just do this. So we're moving stop loss about 0.36% into profit. It's going to put me right around here. 188.49. 47, close. Okay, so what I'm doing here real quick is I'm just going to go ahead and adjust my stop loss. For those of you guys who are in the room, I'm just going to update my position really quick. If you're not in the Discord, by the way, we'll drop the link while I'm chatting. You guys can join the Discord. Discord link will be dropped here in the chat. Just a moment for you. So I'm updating my gold trade. I'm personally trading the GLD ETF. Let's do the GLD ETF first. So my initial stop loss is my initial position is 187.79. And my stop loss is currently trailed to 188.47. 188.47. 187.79. That was my entry. Floating about $1,000 in this trade. And like I said, I would like to get a bigger position on gold if it starts to break through the highs. So I'm watching for that this morning. Let's get the spot gold price equivalents on GLD gold. So stop loss. I can just copy my initial trade. So initially I bought gold at 2026.87. Stop loss is now locked in at 2038.26. All right. Stop loss should be updated here. Just do my cosmetic tweaks here really quick. You know, I used to use a MetaTrader script that would automate all of this stuff for me. And my biggest sadness with losing MetaTrader as a US trader is that I can't do that anymore, because I used to track all of my trades through that. It made it so much easier than doing what I do now. So pity me, what a hard life. I have to punch in numbers. Anyways, so stop is getting adjusted. I'm just going to also screenshot this for people who are watching here with me within the VIP room. Again, if you'd like to join the Discord, we dropped the link there for you. So make sure to do so if you'd like to get in on the action. Okay. I just took a picture. It's a really pretty picture. Let's see what the picture came out to. Oh, it's beautiful. Okay. So we're just going to now trail that in. We're good to go there. Boom, bam. Thank you, ma'am. All right, we're good. So I'm also just going to real quick reply to my initial trade. Okay. Trailing my stop into profit after forming a higher low as we are hitting resistance on the daily chart. If we break through this daily chart resistance, I may look to add on a pullback. I will keep you guys up to date in case I do. Okay. By the way, if you guys would like these alerts, really quick, I'm going to do something. Just give me a second to do this. All right. We're good. That took a couple minutes, but we are all set. Apologies for the delay. I know a lot of you guys who are looking for analysis are like, okay, thank you for finally finishing that. We are good. We are all set. Okay. So yeah, stops trailed on gold, stops trailed on oil. We are in the money here this morning and letting stuff run. The other one is Bitcoin. Bitcoin, man, this thing has just been a monster. Here's IBIT, the ETF that I personally trade. If you're wondering why I trade with ETFs, I just combined CFDs and ETFs. The reason I trade with ETFs like IBIT, GLD, QQQ, SPY, GLD, right? The reason I use those things is because personally, I've always traded stocks and I like stocks and options. So I put it all in one brokerage. I use WeBull. The link for that will drop in the chat really quick. If you'd like to use the same brokers I use, I just trade ETFs, but they move the same way as, you know, gold and oil. I just have to, you know, with all the stuff going on in the recent, world for US traders with losing MetaTrader and all that sort of stuff. I mean, I've been doing this for years, but in case anybody is wondering how I'm able to trade these things, gold, etc., in the US for my US friends, that is how. And again, you get free sign-up shares if you use this link. Okay, in just a moment, we're going to bring in Kenzo to the action. I'm excited to hear from him. We have an interesting week ahead and behind us. This was a volatile week. Again, just to reiterate, overall positions: I am long oil, long gold, long silver, long Bitcoin, and I have some options plays that they're doing quite well. It's been a very good trading week. I wish they were all this good. That's all I can say. Anyways, we're going to bring in Kenzo here in just a moment. We're going to thank a sponsor, then we'll come right back, chat with Kenzo a little bit. Fundamental Friday for your day. Coming in right after this.
Attention A1 Trading Show fans. If you're interested in getting free access to the Edge Finder or our premium trade alerts, listen up. For a limited time, our show's partner broker Eightcap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to Eightcap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now back to the A1 Trading Show.
All right, and we've got Kenzo on the show. Hey Kenzo, how's it going, man?
I'm doing great, thanks, and you, man?
I'm doing really well. And Kenzo, we've got a couple minutes here before we are going to get the manufacturing PMI numbers as well as consumer sentiment. Both of these numbers are pretty key in terms of kind of economic outlook. Consumer sentiment is always a big one, right? Especially, the revised consumer sentiment gives us an idea of what consumers are feeling. What are they looking? What's their outlook for their personal spending? PMI numbers, of course, also very important. How's the manufacturing industry doing from the eyes of purchasing managers? So some big stuff ahead of us, but also I want to ask you just a little bit of kind of where your views are right now. The dollar index has been pulling back. We've seen overall on the daily chart, a pullback in the dollar, but a bit of strength here this morning. What are your thoughts? What are you watching today?
Yeah, gold actually dollar has been going crazy. So my focus was actually on Nasdaqs and US 30s because they were just performing very, very much better. So on the currency pairs, it was difficult to trade. You can see even on the dollar index, we had some crazy rejections, but it was because of some of the economic news. But likely enough, some of the news that we had, like PCE, it was actually unchanged, which was much better. And that might actually make the dollar to go weaker, maybe from next month, as they're going to speak about the interest rates. But beside that, the whole month we had some mixed numbers. Some that were positive, like CPIs, but the other ones, like retail sales, they were just negative. So I think they just balance each other out. But mostly this recent move, some of them is just geopolitical stuff. It's not really maybe about the interest rates or something.
So Kenzo, in the geopolitical front, is there anything that sticks out to you? Because I would generally agree. We're seeing a rare indicator right now, which is the dollar index is up, but so is gold, so is oil, right?
Yes.
Kind of interesting to see all those move together. And what does that tell you?
Yeah, it means there are some stuff going on, but on gold, it's because if maybe the geopolitical news or the tensions are going up, most likely we know that gold can be a safe haven. These days also Bitcoin also can jump in. And another thing is, it depends. If maybe you are in the US, you can think, oh, maybe it's gonna be safer for me to just buy government bonds. That's why now we have this correlation, which is not really normal, because we know that DXY most likely it will be negatively correlated with gold, but this time it's a different story. It's like they're just going in the same direction, you see.
Yeah, it's interesting because what you just mentioned there about when you have treasury bonds doing okay, and then you have the dollar as well. And also you could even throw Bitcoin in there. I've heard some interesting theories as well about Bitcoin not. I really cringe to say it's a safe haven asset, but is there a little bit of a rush into just anything other than kind of other areas of the market? I don't know. What's interesting to me is, again, most people will be very confused by a move higher in the price of gold and at the same time a move higher in the price, the value of the dollar. But again, usually when you get kind of fear in the world, it causes a demand for both as people move out of more risky areas or risky currencies and they move into cash, they move into the US dollar. And at the same time with gold, of course, gold is that age-old safe haven. It's where people have parked their money for thousands of years. So kind of an interesting play on that. You mentioned the indices for a second. I'm curious, did you say you had some trades on the indices this week?
Yes, last week it was very nice because of Nvidia. The market was just going up very nice. Then after we had that area as sort of a resistant, but I'm still positive that maybe we will see a nice reversal there. Unfortunately, the dollar is getting stronger every day, and the market is also stronger. Another one actually that I was actually mostly on it was Nasdaq. So it's actually what I'm looking at. And we had some great trades from this level here because of Nvidia. But if you heard about Gemini, Google AI, I think there was some bad news about it. So we saw some very smaller sell because I think they lost like 90 billion within a few days. But it's just an error that they can actually update. I think the market will still push the upside.
It's been interesting. I guess, Kenzo, I'm curious about your thoughts on Nvidia being such a game changer. I mean, that rally that you pointed out on the Nasdaq there, that pretty much all came out of the Nvidia kind of earnings. Does that make you nervous at all, or do you think it's fine? I mean, to be fair, before I ask that question, there's many times in stock market history where the stock market rallies behind a strong name, but Nvidia really is taking the cake right now in terms of leading the market. Does that make you nervous at all, or do you think it's okay? Do you think it can just keep going?
To me, I think it's a good opportunity because if you can check now, like all over the world, it's something that I actually like. It's not really, if maybe let's say if we compare AI and Bitcoins, or let's say crypto, there were few companies who were just jumping on crypto. Even now there are still a few companies who are still skeptical about crypto. But when we go on AI, it's like every company wants to have a piece of cake. Every company, even if it's not a tech company, even banks,
Right.
or warfare companies, whatever. So you can start to see that the demand is actually there. So even though some days the market won't be performing very well, but the way I see it, mostly the major companies, all bigger companies, mostly they will actually want to adapt to AI, and that will push the demand, obviously. So yeah, sometimes as geopolitical will actually try to push the market up and down, but at the end of the day, we know where this thing is going. It's going to be way too bigger. And for now, when we talk about Nasdaq stocks, that for now, I think the whole year we're going to be circulating everything is going to be actually focusing on AI, and that it's actually good for us who would just like to buy.
Fair enough. What about the metals market? Gold, silver? You have any opinions there or any trades on?
Nope. On gold, to me, it was a bit confusing. If you still remember, I think a few weeks ago or last week, we were actually on this uptrend. So the market was still going up. So I was expecting maybe to see the market going down, but it's easier that it's obvious that the market wants to push the upside. So for me, I can say let's wait a little bit because there's so much stuff happening. If maybe we can get proper structure. Now I see that yes, the market is trying to push to go down, but as we come in from this uptrend, to me it shows me that it seems like it just wants to continue with that trend. If I draw the other trend here, you will see that yeah, we were going down. Now it's like we're going up again. So we were going up, smaller breakout there. Now we are going up again. So it shows that gold also it's actually on a buying side. So I just have to wait. Maybe something will happen.
Yeah, there's a lot of kind of potential trigger events, I would say, too, when it comes to the price of gold. If you get this scenario right now where you're seeing economic data hold in there overall, if that story continues to play and the dollar stays strong because of it, what we might have to start thinking about too, Kenzo, is that there will be bank failures, right? And bank failures, if you remember from 2023, were a huge bullish catalyst. It took gold to all-time highs when we had the Silicon Valley Bank and all that sort of fear in the market. Financial troubles are, of course, a huge bullish catalyst for gold. So if we do start to see this scenario where things break, if interest rates don't come down, it could be an interesting catalyst for gold as well, especially if you see inflation stay stubborn, but the economy starts to slow, which is not necessarily what we see right now. But if that forms, we've been talking about that on the show, that would be a scenario in which gold would really, really rocket, because people would be concerned that the Fed is not going to be able to save both inflation as well as the economy and jobs. So really an interesting story. I do think that gold has the potential to see a move higher in the second half of this year. One of the big reasons for that is that everybody kind of is in the camp of that we're going to get a pretty much a perfect soft landing. Now, what I mean by that is that the market has been ripping higher. And it's what many would argue, myself included at this time, it's concerning because it's priced for perfection, right? Basically, there can't be any hiccups. Yes. You can't have the economy slowing too much. You can't have jobs, unemployment jump too much. You can't have inflation not coming down. Any scenario that breaks that perfect story that we're seeing right now for the stock market causes substantial, kind of concern. And in that concern, I would imagine that we could see a gold spike higher. So I do think that the risk to reward on gold looks decent overall. If we can get breakouts, if we can get continuations, I have a small position on myself. And if we break through these highs, I'll actually look to add more
to
a gold trade. So that's my opinion personally.
Yeah, and you're right. On the bank thing, I just heard this actually. I don't know if maybe that is going to happen. Another bank crash, which might happen actually this month, March. If that happens, yeah, it's going to be a better thing actually. So which means they will actually crash because inflation is still very high. And by the way, it starts to make sense now that I don't really see them cutting anytime soon, because we can see that inflation is still seriously persistent. So there is a chance that they can talk about increasing again, and that will be bad, you see.
Yep.
Because now everyone is just expecting them to cut the rates. But when we check the inflations, everything doesn't really make sense. It doesn't really look good for them to cut. Even if you don't really understand the interest rate stuff, but you start to realize that no, these things are still very high. Unless if they cut and without checking those things, that will be, maybe good. But the news or the figures that we get from this economic news, they are not really making. I don't think they are enough to make them to cut the rates, and that is going to be bad for those banks or anyone who rely on the banks currently. But I'm not saying that they're going to crash. I just had this, I think, from Redacted or something. They were just talking about this, and most likely they were right, because even last year they did talk about stuff like that. And there were few banks which were closed. I think it's last year or last year. I no longer remember.
Yep. No, I think you're right. Well, and Kenzo, I gotta jump in here just for a second, just so we can react here to the news. Got about 15 seconds to go until we get our numbers. Let's go ahead and do our breaking news, and we'll come back and react together.
Okay.
All right, breaking news coming in here. Let's see what we get. We are looking. Whoops, wrong day. Let's switch that over. Seeing the numbers coming in for PMI and consumer sentiment. We get lower than expected in terms of consumer sentiment, and
Whoa.
PMI also lower than expected. My guess, gold probably moves higher. Let's see. There it goes. Gold pushing a bit. US 30, SPX, NAS. Interesting mixed reaction. These are going to be the interesting ones to me because, to be honest, Kenzo, I've been a bit confused how good or bad news impacts stock markets recently because of the anyways, dollar index pulling back just slightly here this morning. Pound and euro liked that for sure. A little bit.
I think.
Yeah. What do you think?
Yeah, I think I think maybe throughout the day, we'll start to see the market take in that direction as it makes the dollar to be a little bit weaker. But I don't think maybe it's going to be that aggressive. It's not going to be that aggressive, but I'm expecting that to happen. Maybe slower. For now, it seems like it's not really that aggressive. We don't really see much of a move, but maybe after 30 minutes or an hour, maybe we'll start to see that reaction towards the market. But it's good for us who are looking to buy.
Yep, fair enough. Well, Kenzo, we've got our next show here starting here just after this. So I want to thank you for coming on. Before we move on to the next session, let me just remind everybody in the audience, if you guys don't follow Extra Hot Forex on YouTube, that is of course Kenzo's YouTube channel. We combine fundamentals and technicals, and so does Kenzo on his channel. If you'd like more of this type of content, help us out. When we do these shows, we have volunteer people who come on and they contribute to what this show is all about, which is bringing, great traders from around the world together to take on the markets. Kenzo comes on each week and helps us out with that. If you guys could do our team here a favor at A1, make sure to go subscribe to Kenzo. Go check out his YouTube channel and show him some love. Kenzo, thank you for coming on the show, man. I appreciate it.
Thank you very much, man. I'll see you next week.
All right. See you next week. All right, guys. And now we're going to say hey to Chris. We can bring Chris in here and say hello. Hey, Chris, how's it going, man?
What's up, Nick? Happy Friday. Happy March 1st. Had that long February with that leap year yesterday.
Yes, that really threw me off. I thought I didn't remember. And so like February 29th came on the calendar. I was like, what the heck? This is weird. So anyways, yeah, it was it's a leap year. So I'm now filled in. Chris, markets are moving here this morning. We've got a bit of volatility in the indices side of things. We've got the Dow lagging the others and the NASDAQ kind of doing its thing. Dollar index jumped off the lows. I'm curious what your thoughts are on the dollar here this morning. Is there upside to the dollar here?
I did take a position on the dollar this week. I like the structure on the DXY. We can go back and forth on the screens, but yeah, I took a basket position on the dollar index. I didn't put any stop losses in my platform. I'm just simply waiting on an alert. I just had it activated to the upside. I was kind of waiting on that all week. So you can see my screen here. So 104.15 to the upside. We're trading right at that level. That just goes back to some of this chop you can see pretty well on the 4-hour time frame. So right in here, I'm still not convinced the dollar really wants to do anything. It's been a very messy basket right now. What I'm really happy about is seeing the Swiss franc get weak. I'm not going to lie. That's been a nice little upturn in all those Swiss pairs. I did a spot check on one of my portfolios. It's up like 350 pips. Another one's up like 750 pips. Lots of room to run on those. And anyway, dollar index, based on what I see, a couple things on the structure. I would really like to see the dollar maintain this look. But I think it's going to have to be the correlation of dollar strength, stock market weakness, or vice versa, right? I mean, we've seen a lot of technical indicators showing that the stock market is likely due for a correction. I'm certainly showing it on every time frame, essentially from 8-hour to daily to weekly. And I just wonder as we get into the Ides of March, if we see a bit of a sell-off. Now, news-wise, if there's not really any major sell-off until non-farm or after non-farm, we survive that week, then you're talking CPI and PPI data. Then you've got the Fed in late March, I think on the 20th. And anyway, it's like, is it still going to be the same? Do you see the Nikkei cross 40,000?
I
Like the
did.
Nikkei is up 19% for the year, man. It's crazy. It's triple the gains of the S&P right now, which is
Yeah.
just crazy. And that also floats into why I think the JPY is going to continue to stay weak. The best place to be as an investor as far as Nikkei is in the Nikkei, and the Japanese yen stays weaker for right now. But dollar index, I see this this posture move, but I told traders this week. If we take this alert out to the downside, I'm going to bail on those positions. I'm giving it a chance right now, but I'm not really sure. I mean, if the melt up continues and it's just this crazy run to double digits on the S&P, the dollar's likely going to get weaker. I just thought it would be weaker at this level of support becoming resistance, not so much like why now? Why is this like the turning point where the dollar gets weaker? I'm not really sure.
Yeah, I've got a similar idea on the dollar. I'll show you my screen really quick just so you can see it. Got two things I'll show you really quick. So dollar index, I've got a long trade in by proxy. I'm short the euro dollar around this area. Dollar index for me stays bullish unless we take out this wick low. But as you mentioned, it's all about upcoming data. You've got a big week next week. You got NFP, you got Jerome Powell speaking. If you get some game changer stuff that takes me out of this trade, then I'll bail on it. But similar to you, I think that we have a little bit of room here on the dollar index. We've changed there was this, and to your point about the indices, Chris, I was bearish on the dollar big time during some of this sell-off. Same time I was right in line with being long the indices. I know you were too. So during that time, there was some really nice opportunities as kind of the Fed indicated, hey, we are done with rate hikes, right? They kind of solidly said that. Market loved it. Got a little bit, in my view, and still has gotten a little too excited. And what creeps me out is now the market seems to be ignoring the signals here where, hey, the dollar is sort of strengthening because economic data is pointing towards we're not going to get easy, smooth like butter rate cuts as soon as we expected. Now, the market has not rolled over hard to my, even though I've been wrong about that, right? I've been kind of sitting out a little bit on the indices. I do still think that there is, as you mentioned, a little bit of a reckoning moment where the market's going to wake up and say, oh, wait a second. Rate cuts really aren't coming. And, if the economy is starting to soften, some of those huge earnings multiples could be called into question. And boom, now you have a 5% correction pretty quick. So I think it's possible. And one other thing I'll show you, we'll come back to that. I am also long oil. This is kind of a trade that I've had on all week. I'm long oil and I'm loving the breakout here. We finally were able to break out of this consolidation. I'm very curious to see if we can squeeze higher going forward. But what do you think do you think the kind of theory with the rate cut wake up could be maybe the catalyst if you get maybe some softening jobs? I don't know. What do you think is the trigger?
I mean, the March rate decision is going to be nothing. It's going to be a pause. It's like 90% probability. What you're going to have to dissect is the language, right? And is this a language that's going to be firm enough and stiff enough that it actually pushes the market down like it did in was it January where the market had a little hiccup and then it was at new highs 3 days later? But it's like the market, we can get it talked down a little bit. I think that technically it's overdue. I wanted to show you this. So I was looking at the Edge Finder, and you guys have a risk on, risk off. I was looking at the AAII sentiment. Let me do a couple of things here. So you've got the sentiment here, and we're sitting up here at 25.2. Historically, or we're sitting at 46.5 bullish right now, which is pretty high. I think 52-week highs is like 50 some percent and change. I wanted to show the CNN Fear and Greed Index. It was 79 yesterday. And it's 77 today. I don't know how high this has to go. I read an article yesterday. I posted on Discord. Ray Dalio had a big LinkedIn newsletter about, are we in a bubble? And according to his metrics, I mean, there's a lot of things that are lining up. It could be one or many things that have to happen for a bubble that he's seen over history. But where he kind of put the bubble in relation to like 1998, 1999, and 2006, 2007, we're not in that bubbly type environment right now. But I think that the market moves faster. I think the cycles are faster. I think that this overstretch move has a 3, 4, 5% like snap. And then we're going to see how eager the bulls are to jump back in, or we're going to see some profit taking. Like at these levels, when we've had a run pretty much straight up. I mean, if you look at every index in the US, 20+% on the. I mean, we're at this is just nuts, man. Like we're stretching those highs at 510. The Qs just gave me an alert at 441. I mean, every index from our October bottom, we've got the Qs up around 28.8%. You've got the SPY up over 25%, I believe, and the Dow's right there with it. So we've just had a crazy, crazy melt up. 24.3%. The DIA is right there with it. Again, you see all these little red lines. That's just attaching some overbought conditions with divergence. The Dow is struggling at these highs, but we're still up 21% of the Dow. And then don't forget the old Russell. I took a trade on the Russell, Russell's futures. I'm just doing bull put spreads on the Russell right now until we have a breakout. Once we get the breakout, I will be looking at the Russell's futures market to go much, much higher. I think the catch-up trade is, and this is the other thing that's like, could the upside still be the broader market? Like that's what I'm still asking right now is I'm looking at the technicals for a correction, but if the Russell makes a big push for a catch-up trade, this move just getting back to all-time highs is like another 15 to 16%. So we get up to these highs. That's the broader market small caps that are making a run. And every week when I check the top 25, the Russell top 25 is crushing it. They're on average, they're up like 24, 25% a week. Versus the index is 1 or 2% up or down. So again, you have that concentration with, top 10 holdings, top 25, top 25. They're all outperforming the broader market right now. But yeah, the Russell I think looks interesting. So like I said, I'm doing credit spreads right now where I'm just selling a put, buying a put, and time works in my favor. If we just range trade, I still make money. We go up, I make money, and I'll start adding more positions here because I think we can get a little bit more aggressive on a break above. It's really close, man. We get a break above 2100. We're talking about this all the way up to 2400. It's a little bit easier to see the IWM. That's the cheaper ETF to play. But we're trading at 204. We keep knocking on the doors there at 205. And same type of thing. We break above 205, 206. We're talking about this at 240.
Yep.
So is that like
IWM, are you long shares and then selling calls and selling puts? Is that what the full scenario is?
I'm not long shares. No, I'm just doing credit spreads right now, just simply trading options. Yep. So it's just out of the money credit spreads, which means, sell a put, buy a put. That's it. So it's a spread. So it's defined risk. But I'm out about, 30 days and 45 days and 60 days. I like to stagger them out. But my levels are like on the IWM, I've got a 187 by 185 and a 185 by 180. I did some Russell's future index trades yesterday and I put it down here around 1900. So same type of thing where it's like, I'm just looking at the structure. As long as we don't come back and violate this level, I'm just staying out of the way for right now. And then where I want to get a little bit more aggressive is let's just get a clear breakout. And here's what's going to be important. Not just a breakout, but like a daily, a weekly close above these levels. Show there's some conviction in that price action. And then look to get a little bit longer and maybe a little more aggressive. Then I can do some call options, some debit spreads, things like that. But I'll certainly look to utilize options to make some money there.
Fair enough. Yeah. Well, Chris, I'm going to leave you with that. I also wanted to just before I leave, I'll show you my current options trades. I'm way simpler than you.
Cash secured puts.
That's it. And you mentioned the reason I wanted to bring this up, Chris, is because obviously they're going well. That's why I wanted to show everybody. But the other real reason is because you mentioned like everything is rallying. It's really hard. I'm in struggle mode because I can't sell puts on anything, right? If everything is just way up and volatility is way down, it's very, very tricky to sit and wait. But I mean, right now, I feel like the best, I had several things. Obviously, it would have been better to actually own the underlying, like hindsight 2020. I should have owned the Russell, should have sold, had ownership of a consumer discretionary ETF and the tech ETF. But of course, I sold puts on these things. I'd like to sell more puts, but like you, I'm waiting for that pullback for opportunities. I do think that, I don't think we're a doom gloom, massive crash on the horizon, but I do think we're due for a pullback. So we'll keep saying it until it happens. And then when it happens, we can start making some moves. But Chris, I'll leave you with the show here for a little bit, guys. Everybody make sure we'll drop the link to Chris's channel. If you have not already, make sure to go follow him on social media as well. He's going to be taking over the show here for a little bit. You guys are in great hands. He's got some awesome analysis he'll go through. Chris, enjoy it and have a great weekend, man.
Thanks, Nick. You too.
Thanks.
All right. I will grab, the screen's mine. So nice to be continuing along with the session today. So I talked about the levels I'm watching this morning on the SPY. We're trading around 510 right now on the SPY. The SPX is around 5107. Again, it's the first week of the month. If there's not really an intense profit taking today, here is a level that I'm watching. Let me see if I can bring this screen. Let me float this out a little bit. All right, so this is some option software that I use. These are the pre-market gamma levels and open interest levels that I was eyeing this morning. And we're sitting here. So we had, gap fill yesterday. This is the big one from NVIDIA that I'm curious over the next couple of weeks if we get a fill on. We're trading at 510 right now. Here's what I will look to do. If we get up into this like 512, 513, I will probably look at a Monday, Tuesday expiration to look for a sell opportunity going into next week's trading. We'll talk about that. So at 11 o'clock, I'm going to jump into my equities on demand trading room. All the traders that follow me can log in there through Smart Trader. But I want to see what price does today. One little metric that I'm testing out is where are we the first 15 minutes of trading? And the first 15 minutes, you can see here that the volume was right around 3.9 million shares. And that's a little bit on the low end. So statistics I was looking at were this is like 5 years running, that if you open up on the SPY in the first 15 minutes at about 5 million shares or 5.5 million shares or higher, obviously, then we typically see that day followed by much more volatility and higher volume moves. So the volume typically translates into slightly more direction. And so we're looking here that, I mean, we had that initial pop right in the first, 15 minutes. It was noisy. We're getting some low volume push to the upside right now. I am very curious where we at real time. You can see that we're kind of stacked up here in these gamma levels. That's that 513 I was talking about. I don't know if today is the day that I would say I'm going to short it just for today. But I'd feel pretty confident that if we drifted up here to like 12 or 13, that I could take a trade going into next week and probably get that to be positive. Meaning I could take a long put. If I wanted to just simply take a long put, go out a week, it might cost me $3 or $4. If I wanted to do a debit spread on that, I could do a long put up here around 513 to 515. I could look for that expiration out to March 8th and see if I'm right with the long put paying me out pretty quickly. Where would I go if we came back down to this low from yesterday around 505? That could be an option that's worth $7 to $8. If we came back and tried to fill this gap in any way, shape, or form, that's a big long put profit, in my opinion, at least in the near term. So I'm going to watch this for the remainder of the day. Like I said, we're just kind of melting up higher, drifting up higher. I can kind of take off the volume stuff now, but I'll go back to the 5-minute time frame. We're just seeing straight up call option volume in the markets today, and this is a closer look at that 5-minute. So, do we breach the highs at 510? Do we, I mean, we had a really aggressive sell off at the end of the day yesterday, like closing bell. But 54 to 22 on the call option versus put option. Expirations and open interest today, I thought was pretty interesting. Let me dock this back there and get that out of the way. Let's go into open interest for today. On the upside, this is for March 1st. Yes, so we have all upside call option open interest right there. We're sitting around that 509, 510 handle. I said this morning before I started the session here with A1 that 512 was a spot that I look for. Okay, that satisfies the open interest level, and I could see some possible fading from there. Because what's interesting is take a look at this. Literally go into next week's expiration. So if I go next week, which goes out to the 8th on Friday, and obviously there's expirations Monday, Tuesday, Wednesday, but even going out to next week, you notice how sparse it is to the upside. So we do have some, and this can obviously change with fresh interest and zero DTE and stuff like that. So this can change, but we are pretty sparse to the upside around that 515 on the high side, and you start to see some pretty big spikes. I mean, we've got a put spike all the way back down here, the open interest at 500. So if I'm looking at shorting at 512, 513, 515 even, I would love to get a 505 or 500 for some profit on a long put going into next week. So again, just trying to take a stab at it. Not going to cost me an arm or a leg. If I'm right, pays out pretty well, probably high reward to risk. But that's stuff I'm watching on the option side of thing and then looking at price action today on the SPY. If we struggle at the 510 level, I took a trade this week. I'm doing a 507.50. It's a long put. I'm going all the way out to April 5th. And I'm just looking for the month. If I'm right with some direction, if the Fed talks it down, if the data disappoints, if the market has a reality check for just a second after these crazy earnings that we had in Q4 that translated into price in Q1, I'm just watching. One thing I did do this morning, I also started to dollar cost average into. So I've been in BITO for a while. This is a ProShares Bitcoin ETF. I bought some more shares today. I'm also using BITO so I can trade options. But I have also gotten myself into IBIT. which is the BlackRock ETF, cold storage Bitcoin stuff. There's like 300,000 Bitcoins that have been added into these ETF flows, which I did the math on that yesterday. This is kind of nuts. If you look at 300,000 Bitcoin, okay, 300,000 Bitcoin, and yes, we're about 49 to 50 days away from this Bitcoin halvening, producing some more scarcity, harder to mine. But we have 300,000 Bitcoin that have flowed into these ETFs. If you take that at the spot price, which is around 62,000, 63,000, 61,000, yeah. So let's just take that 300,000 times the 61,800. You're looking at $18.5 billion in inflows in these ETFs in the last month. That's insane, right? I mean, they've just been around, so they just got announced, and anyway, it's just staggering. I'm sure that there's going to be some bag holders that try to buy it now, but at the same time, I mean, what's to stop Bitcoin from making a run back up to 69,000? And why does it have to stop there? I mean, it can, right? We can have a reality check and it can hit 69 and pause a little bit, but if we get above 69, I'm pretty determined to see if Bitcoin goes to 100K this year. Wouldn't be surprising. It depends on, I mean, certainly it's risk appetite. We're starting to see some diversification away from the dollar. So risk appetite would be very interesting to see if we stretch up to 100,000 plus, then we're talking another, kind of record breaking parabolic run with Bitcoin. Maybe it continues to kind of cement itself as one of the best all time trading assets the last decade plus. Although now you're going to have to talk about NVIDIA in that conversation as well. Top two stocks this year have been Meta and NVIDIA by a long shot. It's insane. But we'll figure it out. What is this? All right. Any other questions? I'm seeing a lot of chats coming in. Any questions or comments for me? Actually, I meant to stream this to my own audience today, but I guess I forgot. No big deal. It's fine. We went live at 9 o'clock. Let's see here. So if anybody has questions for me, type it in the chat. Just want to check it out. If you don't mind, just so I know, will you type Chris and then ask me the question so I know it's for me? Sometimes I see the chat taking off and, we've got some talkers with one another. Court was asking about Bitcoin. I just talked about that. Brokers to use. I have IG. If that question's for me, I have broker accounts with Tasty Trade. I have broker accounts with Schwab, TD Ameritrade. I have accounts with OANDA and Global Prime Forex and Devisa. And I think that's it. So I've got, and I have an Interactive Brokers account, but I'm over with Tasty right now. So anyway, I mean, I'm all over the place. I've got accounts all over the place. I've got some auto trading accounts. Speaking of auto trading, let me see how my robots did this week. Let's go a little Pockets Pattern Pro. This will help me with my blog later this week. Let me do this. I'm going to go ahead and I'm going to stream this to my audience. So we'll jump into my channel here. Pulver report plus A1 trading. And I've got it linked up right here. Copy. Okay, so now I can join the chat and hop in with you. So let's save, and that should push out to my channel as well. There we go. So now I can say, do I trade the US 30? Yeah, I trade the Dow. I mean, US 30, the Dow, pretty much same thing. So I mean, if I want to trade futures, yes. If I want to trade the DIA, same type of thing. It just depends on price structure. I really trade the SPX and the SPY a lot more. The DIA is solid. We had a great run. I was very active in the DIA Q4 because I was anticipating that kind of broad market rip. So the DIA and the Qs and the SPY all paid very, very well in Q4 last year. At this point, this is a quieter move day to day. This only has like a $6 or $7 weekly ATR. The SPY has about a $9 to $10 ATR. The Qs run $11 to $12 ATR. So, yes, I trade. I mean, I trade pretty much everything. Yeah. Let me get some other questions here. So yes, I trade the US 30. Analysis on euro dollar. Okay, I'll take a look at that one. The VIX again. Do you think the dollar yen to go back up? I am long the dollar yen right now. I think the yen in general, as I mentioned before when Nick was on the show, the Nikkei 225 stretching up here at 39,910. I mean, look at this. This is a daily candle. This thing is just nonstop. Again, I mean, look at my daily chart. You can see that it's overbought. You can see some divergence. I mean, we're going to have a pullback. Like, this is not a typical index rally. This is insane. It doesn't mean it has to stop right now, but it's like, yeah, I see there's going to be some type of seasonality to it where yes, the Nikkei will pause, the Nikkei will dip, but what's going to be interesting is how much higher does it get than this previous all-time high? If this is up another like 5 or 10% and then it pulls back, well, this becomes a chance for it to bounce and actually see the rally get checked a little bit. The more ominous sign would be if we all of a sudden have this huge decline and then we look at like a cup and handle and it gives back, because we've been on a rip, by the way, since like 2009. This thing has been nonstop. It still has underperformed the S&P as a whole, but it's pretty nice to see it blow out the levels this year where it's up like 18, 19%, and the S&P is only up about 6 or 7%. So it's been a good place to be. We're going at those all-time highs, but I don't know if anybody appreciated being in a 34-year drawdown. I wouldn't have. But like I said, I listened to some content last night, and it's really just a lesson in diversification, a lesson in dollar cost averaging. But certainly, all your eggs in one basket for a drawdown like this would be just absolutely brutal. But if you had some time horizon, 34 years, it pays its dividends, right? Just every month, every quarter, dollar cost average, and all of a sudden you're like, I'm a genius. But it's time in the market. That's really what it is. So diversification, time in the market, pays a lot of dividends. I've been participating in stocks since 2000. I'm not. I don't have a crystal ball. Nobody does. But I do know that time in the market has a high probability of being right. If you trade the baskets, especially since the ETFs have been around, you get the haystack, right? I mean, that's the hard part. Is everyone's chasing Nvidia, everyone's chasing SMCI, everyone's chasing Bitcoin. Look, the baskets, the ETFs that are out there, they help the everyday trader. You get exposure on the things that are performing best without having to buy the needle, because nobody knows. The needle can shift from stock to stock, week to week, day to day, quarter to quarter, month to month, year to year, and the haystack's a little bit easier to buy, right? Okay. Lee asking about robots. Yeah, I'll show you. Let me grab something here. Chartle, I'm going off spies at 510. All right, we're just creeping up to those highs at 510. I'm not going to take a sell position on it right now. I do want to see. Let me log into my Schwab account. I might look at a 0 DTE trade. If we stretch up to like 5, like I said, 512, 513 today, I will definitely look at a short position. Let me get logged into Schwab. I'll show you the robots here in just a moment. I've got my Discord channel right here. I'll post this before I leave today. If anybody's interested in joining my Discord channel, it's Chris Pulver Trading is the server. Just like with Nick and the team, I mean, make sure that, if you're in my Discord channel, my avatar and my name is real Chris Pulver. It's not a period. It's not a dot. It's not a number. There's not 2 L's. It's all spelled correctly. This is the best place to find me. I will never directly message you and initiate some conversation about crypto or initiate something about blah, blah, blah. Look at what I do. Put some money with. I never do that. So that. Just report those scammers out there because they're brutal. But this is my Discord channel. I put all my content in one place. So, free group chat for the community. When I go live on YouTube, the link is available right here. I blog every week on Fridays. I post my updates on how I did in the trading rooms, how we did in robot trading, just thoughts and commentary. And then anything on Twitter, any analysis. I think I posted that Ray Dalio article right here. Education. This is where you can find my robots. So my trading room, I can give everyone a trial for a month for $27. You can trade with me Monday through Friday. My trading rooms is $27. It's a good deal. You want to trade Forex, get to the Flex trading room. You want to trade equities on demand, get to the equities on demand trading room. So you can see them right here. So Flex trading room, equities on demand. This is active stocks and options, Monday through Friday. This is Forex Tuesday, Wednesday, Thursday. I'm live on YouTube. So I'm live 5 days a week. You can find me, and I'm always placing trades. Yeah. And then I also do a lot of private instruction. So one-on-ones. I work with a lot of small groups, like groups of 5, groups of 10. It helps the cost. I mean, I'm willing to allocate, 4 to 8 hours to a workshop and talk all things Forex, talk all things, futures, options, equities, like whatever asset class you want to trade. I will help and share my experience, share my best practices. And that's what I'm here for. I have a lot of fun doing that. It's nice to meet a lot of traders out there around the world. Affiliate links. Obviously, I'm here with A1 Trading. Edge Finder is great. Anything in my trading rooms, all here with education for not just my trading rooms, but I've got lots of courses in here as well. These courses are all full courses, videos, strategy guides, and robots. A lot of these have robot trades attached to them. Portfolio builders, pure manual, everything else. I have, Delta Traders, all stocks and options. Masterflex, full course with robot. Right Trader, full course with robot. Perfect Storm is full course with robot. Pockets Pattern, full course with robot. All these. Okay. So if interested in any robot trading, again, jump into the Discord channel. Feel free to message me if you want to ask some questions. I'm happy to share some insight and all that. But these have been around for several years. I mean, I think the latest one, the one I just did that I'm running right now is a hyper trend. It's a full auto trend system. I just launched it last week. It's a high time frame, like it's a full auto January to December trend robot. So it's going to take time to find these seasonal trends. The reason I got it deployed now is March, April, May. We typically have a lot of trends that kick in the markets, and so I'm going to let it catch its trend, let it get its confirmations, and then off we go, and hopefully get several thousand pips collected. So anyway, that is that. I'll post that before I go today. And just robots this week. Let me do a spot check on my robots. My Pockets Pattern Pro did 249 this week. Okay. My Perfect Storm, I've got a Perfect Storm original one that is just sitting in some trades. It didn't do much this week. It's really quiet. 40 pips on the week for Perfect Storm. That's a little disappointing. Perfect Storm Pro. See how this one did. That's a little bit better. 286. So I've got a 286. I'll post this in my blog later. So I got a 286 on Perfect Storm Pro. That's not 296. It's 286. 286 on Perfect Storm Pro. 40 pips on the original Perfect Storm. And Pockets Pattern Pro was 249. 249 for 575 in auto trading this week. If I go to my flex room, we close out a couple trades for profit. I had the dollar CAD for 116. We closed out the pound New Zealand for 102. If I go into, I think the Euro Aussie, I didn't close that trade out, but we're in profit on that one. Did I close anything else out? Let me see here. Aussie or dollar CAD closed out Euro Aussie for 64 pips. Okay, 64 pips. Anything else? Pound New Zealand I captured. Euro Yen, that was last week. That seems to be about my week. Yeah, that was about it. So 857 pips this week between some manual trades in the trading room and some robot trades. And obviously not a bad week. I'll take that. And making some money in the markets, SPY, Qs, some small gains, getting some positions established. Overall, how am I doing for the day? We're up on the day. We're sitting here at that 510 handle. I'm going to get logged into Schwab and see if I can find a 0 DTE trade that I like, but it's got to be all the way up to 512, 513 for me to take that trade in the SPY. And that should be good to log in there. And any other questions? Analysis on DXY. Yep. So you must have come in a little bit late. We just did DXY. This is what I see on my charts. And then let me get logged in here with that two-step authenticator. Okay. So I should be up on the portfolio with the SPY. I want to take a look at the overall day-to-day. So pretty flat on the day overall, just getting some positions established. If I do this and go all positions, this is everything. So clearly I got a lot of stuff going on in the stocks and options portfolio. I'm up about 1.46% on my Schwab account, getting some buying power back. I'm looking for that 0 DT if I can find it. We just keep fading off that 510 for right now. I kind of want to get a position. So when my equities on demand class starts at 11 o'clock, we're going to look at something into, I mean, we've got the 507.50 put. I'm kind of positioned bullish or bearish rather. We'll take a look at a couple trades for next week. I think I want to do something where we have an 8 expiration and 11 expiration. Do a little bit of a diagonal or calendar spread that I can look at. So it's favoring call option volume 55 to 19. A lot of what I'm doing. So Nick showed his cash secured puts, which is great. I mean, essentially means he's collecting some income without having to own stocks, right? So you're taking on some risk there by just doing a naked put, but that's a Buffett style thing. You know, cash secured puts are great because you basically say, this is where I want to buy the stock, right? And the issue is, so how about this? If somebody wants to buy a stock, give me a stock. And I'll give you an example of how to use a cash secured put. Yes, LG's asking about dollar Swiss. Yes, all freaking day. 96, 9600, 9600 is like target 1, 1.00 is target 2. Dollar Swiss all day, positive swap. Give it to me. Come to Papa. Yeah, I'm bullish on everything against the Swiss except for Swiss yen. That's the only one. CAD Swiss, Vincent, same thing, man. I cannot be bullish enough on these Swiss pairs, meaning not Swiss strength, but I'm talking everything against it. I did the structure this morning in my 9 o'clock session. We're getting closer. Professional Instacart, I did buy some shares that last week or before the earnings report. I bought some shares at $24.50. That's a big old rip to the upside. Good for Instacart. So yep, I'm up about $9 a share right now. I bought it at 24.50. I did a credit spread 24.50 by 24 and collected a whopping 25 cents a contract. But then I also bought 100 shares, and that's up a decent chunk. So at this point, I'm not really looking to do anything nuts on this, but I mean it's such a fresh chart. I mean, as far as the IPO last fall in September, I'm just staying out of the way. It also isn't quite profitable, right? I mean, I looked at the snowflake analysis. I'm trying to stay out of companies that don't make money. If you are, not profitable, not expected to be profitable for the next 1 to 3 years, I'm not trying to own. I'm not trying to buy. I'll trade some options. But anyway, this has been a great run since that earnings report. So we finally had a nice move as far as EPS, but still, they don't make money, right? I mean, they make money. They get $800 million, but it's like they missed on expectations for revenue. EPS was better though, but whatever. I mean, it's up. I'm happy. But what do I do from here? You want to buy it now at 33 when it's already up, 50%, 40% in the last couple weeks? I mean, you can, but I dollar cost average, right? If I want to buy some now, does it come back to these lows? There's spot 1, spot 2, stop loss below, and if we just go up and up and up, we're talking about Instacart, Maple Bear Inc. I mean, could we go back up to the SPAC IPO price? I think it was IPO around $43, probably. Typically, it takes longer than that. Okay, how many times do earnings come out per year? Quarterly earnings. So we just had Q4 earnings season come out for Q1. Right. So once we get through Q1, then we start earnings season for Q1, but it's going to be traded in Q2. And that'll take us into that, sell in May, go away. What do we get to the summer times? What type of drift do we have in May and June? Let's see here. I want to talk. I think I'm missing some questions here. DXY. So freaking dollar, man. It just won't go. I said this morning that if I get stopped out, or not stopped out, but if my alert goes off right here, then I will probably bail on the dollar strength that I'm in. I just took a basket trade this week against everything. So I'm short Aussie dollar, short euro dollar, short pound dollar. I closed out on dollar CAD for profit. I'm still long dollar Swiss. I'm long dollar yen. So I'm going to stick with that. But if it's not cooperating, if the dollar index ticks that alert, I'll get out of those trades just for small losses. Let's see here. Instacart, we're good. Dollar Swiss still holding. Yes. CAD Swiss, same thing. All my Swiss pairs. CAD Swiss is looking really good. Euro Swiss is looking good. Yep. So this is CAD Swiss. I'd love to see the CAD Swiss continue to break. Technically, this is what I spotted. So I was watching for a head and shoulders. Left shoulder, head to neckline, right shoulder. We break, we retest. It's right there at the same neckline. That's a great technical trade right there. Right? Look at this high. That's a circle. Let me use a straight line. Right there. So this is the neckline, right? If we create that right shoulder area there, okay, we pulled back to past resistance becoming support and had a perfect bounce. I'm looking at this type of trend line break to the upside. I'm looking at CAD Swiss to get back to these highs at 68. And I'm looking at a big pocket. I'll zoom out here, big pocket at 71.50. Way up here. So I am bullish on this all the way up to 71.50. That level 71.50, fill that pocket up around 72, 72.50. That's a lot of upside, right? That's another 500 or 600 pips. I can stay bullish on CAD Swiss and not worry about it. Lee says, I didn't catch your discussion, positive swaps on Swiss and yen, but I didn't catch the whole conversation. Yeah, all I'm talking about is I am long against the Swiss. So Aussie Swiss long, Euro Swiss long, Pound Swiss long, New Zealand Swiss long, Dollar Swiss long. I'm not doing anything with Swiss yen. Throw it away. But those other currency pairs, everything against the Swiss, I'm buying because it offers positive carry. So as an example, I launched a course called Portfolio Builder. We're manually buying trades against the Swiss. And just since last fall, I'm taking trades that are literally micro lots, like very small trade sizes. And over the last 4 or 5 months, I've already collected $250 in profit. Just my balance has gone up because of positive carry. In addition to that, my P&L is up like 400 pips. I've got positive swap on top of that. So even if the charts went nowhere, I'd still collect about 5 or 10. I'd probably collect about 5% for the year. But I started this trade in 2023. So I'm nearing like 9 or 10% after this year of just positive rollover, in addition to having the appreciation in the technicals. So it's a nice way for me if I can, make 100% of my account because of my pip positions and my technicals, and I can add in another 10% buffer. It's better than getting charged every day to hold a position like we were in 2022. Yep. Let's see here. Nick's idea of selling an option price. Let's see. Yeah, so it's funny. That was a conversation I was having. Hey, give me a stock. Let's talk about cash secured puts. And then I took some other quests, and all of a sudden I'm down a rabbit hole. CAD does well if oil prices go up. Yes, I do. And that's why I also got out of the dollar CAD. I was long the dollar CAD. And I said this week, if we tap these highs, close positions. We bought this on the dip. So we had this pullback right here. We bought the dollar CAD and it just tested, 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 tested. I'm out because of this. And this is right in the middle of all this crap, too, right? So all this resistance and support in the middle, that's kind of the halfway point. We have all this resistance up here. We have all the support down here. If this if this is like an ascending wedge where it looked something like equal highs and then higher lows, I would say the dollar CAD is going to go higher. But it kind of looks a bit more like a rising wedge, and so that to me, in the middle of all this junk, if this dollar CAD heads lower and breaks the structure down here, I think dollar CAD maybe comes back to 32. And that would be because of oil. I think oil would have a big play in dollar weakness. If we see it, we'll watch the DXY. But if oil continues to head higher, we're at $80 right now. Oil starts creeping up to that, high 80s, 90, 92.50. That's a decent run in oil. I think CAD could get stronger from that. Yep, for sure. Okay. I asked for a stock. Let's just find one, right? I'm thinking. I couldn't really get a glance at what Nick had for cash secured puts, but let's just say that Nick's in the Russell. Right. So let's say it's IWM because the ETF is cheaper. It's 205 versus Russell's, 20,000. Right. If you go to the Russell, you're talking about an index at 2,000. So IWM is much cheaper to trade. We're trading at 205.30. If I'm going to look at an options chain right now on the IWM, and here'd be the deal. Let's say that I believe that small caps are going to rally this year. Okay. That's all I want to do. So I go into a trade on IWM. Now, a put, if you want to collect some premium, there's two ways this works. If I sell a put and that's it, if that price of the IWM comes down to that put level, as long as it stays above it, that's my line in the sand. So as long as it stays above it, I collect whatever premium I can. So let's go into something. Here's a 42-day expiration. I can say that funny. So we go to April 12th. That's right before the April monthly expiration. That's a weekly in April 12th. That's 40. I'm going to go 49 days. Let's go April 19th. So April 19th, we look at the expected move. Now we're trading at 205 and change right now. If I looked at the expected move for the next, 49 days, we've got about a $12 move with the implied volatility on the Russell or the IWM. Now, if I wanted to be safe, where I said, okay, what's the low probability of getting assigned shares in the IWM? It's all about delta to me. So if I see here that, this is the expected move around that 20 to 21 delta, if I want to stay out of the way, I would do a 15 delta cash secured put, which means if I sell the 189 put over the next 49 days, I can collect $1.34. Now, here's the good and the bad. Probability of profit is 86%. That's quite high. I mean, the likelihood of getting assigned, we'd have to have a really bad drop in the Russell for that to get assigned or even threatened. So that's a pretty safe play. 86% is always pretty good. Collecting $1.34, that's great. You make $134 for a one contract trade. Now, if you want to own shares of the IWM, because it's a $189 stock, $189 is going to set you back. Max loss is 18,000 if it went to zero, which probably not going to happen. But effective buying power, because if you have a margin account, and most traders and equities and options have margin accounts. I trade a lot of cash accounts and IRA accounts for, it's tighter equity management for me. But you can see the buying power is reduced by about $2,400. So for me to sell a put, okay, I have to basically set aside $2,400 in buying power, but I can collect $135 on that with a low probability of getting assigned. So right now I can tell the market, look, I'll buy the Russell at 189, but my investment would be if I made $134, $134 out of the cash outpour of 2461. Okay, it doesn't seem like a lot, but that's a 5% position. I'll make 5% return on my investment in about 49 days. And if that's all I did every quarter, right? That's 5%, 5%, 5%, 5%. And I don't even own the stock. So that all by itself is a way to never own a stock, generate some income, and get about a 20% return on that position on the investment. I'm not saying 20% for the entire account. I'm saying on that investment. It's going to cost me $2,400 to place the trade as far as buying power reduction, But a 5% return, 5% return, do it every quarter. You know, do that on the SPY, do that on the IWM, do that on the Qs. Yes, you're going to have some buying power on all those taken away because they're ETFs and they're expensive. You do that on stocks as well. But that's a nice way that you never have to own. Now, to make it cheaper, if I did the 189 sell put and I want to spread that out, I can collect 12 cents, but only have to risk $88 instead of having to risk, you know, to zero, which is $18,000. But obviously I collect way less income. So if the same position was this, rather than putting up the buying power of $2,400, if I did, you know, 5 contracts, I only have to put up $440. If I do 10 contracts, I only have to put up $880. I'd still make $120 over the same period. But this prevents me from, if the stock plummets, this prevents me from getting assigned and not having protection. You know, I can still make $120. It only costs $880 to take the trade. I love that trade. You know, and the probability of that trade getting hit, pretty slim. In fact, I like the trade enough. I'm going to take it. Let me see what I have in the IWM right now. So for this account, IWM, I don't have it. So I'm going to take the trade. The 189 by 180, I'm going to do 10 contracts here. Let me make sure I have the right account here. And let's get it. So 12 credit. I'm not taking less than 10, that's for sure. So 11 cents, see if I can get filled there. You turds. 10 cents final offer. That's the bid price. I should get filled at 10. The bid is freaking 12, man. Come on. Hang on a second. Let me delete this, try something else. So if I do the 15 delta, cancel this trade. Let's do, so that's a, I mean, I could do the naked. That's okay. I still collect the same amount, but the buying power is what I don't want to see, or the max loss, obviously, if the Russell gets crushed. Spread is way better. If I do a $2 spread, it'd be nice if I'm making 24 cents on the dollar. This is making 22 cents on a $2 spread. Thoughts on Mara? Yep. Is the premium what you get paid for holding it? The premium is what you get paid for selling it. That's if you're asking about options. So if I sell the option, I collect the premium up front, and then time goes on, and that premium becomes realized and materialized. So if I'm collecting 100% up front, it allows me to keep that as time expires and the option expires worthless, right? If you have 2 positions, it's like a stop loss. It's like a defined risk, right? It's not a stop loss per se, but it does cap my losses, where the most I can lose, if I did this trade right here, the most I could lose is $88 on a 1 contract trade. So this stock could literally go to 0, and the most I can lose is $88. That's defined risk. That's very important as a trader. All right. MARA, I like everything related to the crypto space right now. I'm long Coinbase with, credit spreads. I'm long MSTR with credit spreads. I am long on BITO. Like I said, I bought some shares of BITO. I'm expecting a pullback. I'll just buy some more. I like this level. We get a pullback towards 2340, which represents that kind of, $47,000 to $48,000 high in Bitcoin. MARA is a mining stock. They had a miss on earnings, which was unfortunate, but it's okay because I still own shares of MARA. I've got it covered out to June at 45, which is going to put me up around $30 a share if I get that called away. I've been in Mara since like the teens, so I do like this stock. I'm just doing some out of the money credit spreads, but yeah, I am in like, and again, it's not ridiculous exposure. I'm allocating about 5 to 10% of my portfolio towards Bitcoin related trades, Bitcoin correlated trades. I wouldn't be surprised if Bitcoin gets to 100 grand this year. We've got the halvening. We clearly have the ETFs that are driving demand and putting all these flows out there. So it seems to be an exciting bull market right now. The rally is pretty legit, and I'm just gonna pick my battles and trade my options as well, so I get a little bit extra juice on those earnings as opposed to just holding Bitcoin. Reverse iron condor option strategy. Would I briefly explain that? No. Reverse iron condor is like 2 debit spreads. It's also an iron butterfly. Lee, I would recommend, how about this? How about you jump into my Equities on Demand trading room for a trial at $27, and you got all the education and videos, and I'll talk about strategies like that. It's a 4-leg option trade. In order to trade this type of stuff, remember when you start a stock account, if you're asking for options permissions, if you tell the broker that I don't know anything about options, the only thing they're going to grant you is basic options. You can buy a put, you can buy a call. That's pretty much it. So the more extensive knowledge that you have or claim to have, the more permissions you get. And in truth, being a seller of options gives you 4 out of 5 ways to make money. So ultimately, and I tell this to everybody that follows me into my trading room, ultimately the permissions you want to have with an options broker or with a broker, equities broker with options permissions, is you want to be able to trade spreads. Period. You want to be able to trade spreads. It is crazy that they would give you the willingness to say you can buy a call and you can buy a put. Well, that's easy. But what you can't do is you can't define your risk, and so you just end up overpaying premiums, especially now when the markets are up and calls are more expensive and buying options are more expensive. You overpay for those premiums. So ultimately, like I said, if you're getting options permissions, you want to be able to trade spreads because then you can define your risk. You can be more creative with the up, down, sideways strategies. Wouldn't you say just buying calls and selling calls are enough? Well, that's two totally different things there, Pedro. Buying calls and selling calls are two different things. If you buy a call, that's a long option. If you sell a call all by itself, that's a naked call. That's the riskiest thing in trading. So you'll never do that by itself. But if you're selling calls against shares you own, that's a covered call, right? So if I have 100 shares of, MARA, and I did this right here. So I have shares of MARA at like, $15 or something is my break even. I have it covered at $45, which means if MARA goes up to $45, the stock gets called away, I turn about a $30 profit, plus I collected 95 cents on that credit on the sell call. So sell calls is just covered calls, but is it enough? No. If you want to be an options trader, do not limit yourself to those strategies. If I had to survive on only buying calls, only buying puts, I wouldn't be an option trader. You only have one way to make money. You got to be right directionally, and you've got to be right by enough direction to cover the cost of your trade. That is tough to do, especially when it comes to a time expiration. No, don't apologize. It's good stuff. Oh, you might buy puts. Well, yeah. Is it enough? I say no, because you're going to overpay for buying, overpay for selling, and if that's all you can do, you're limited, man. And I'm telling you, I have talked to so many traders. I do a lot of one-on-one sessions with traders that tell me, Chris, I got involved with options and I just lost a ton. Well, what did you do with those options? Well, I bought calls and I bought puts. I hear that story over and over and over again, right? So if you get the permissions to trade spreads, big difference. All right. So let me go to LG's question on the iron condor. Okay. So reverse iron condor. Let me explain the original iron condor. So I still want to take this trade on the Russell for the 189 by 188. I still want to take this trade for 12 cents. I'm kind of, and this is why I took the Russell futures index yesterday, because I couldn't get filled on the 189 by 188 in the Russell. So let me try to get this filled again. How many contracts am I doing here? 1. Nah, I'm doing 10. Let's do 10 contracts here. And review and send. That's the proper account. All right. Final chance. I'm going to go the 10 cents. Whatever, dude. I'll do it. 10 cents. It'll fill. I'm going to try 11 just in case. You freaking turds. I do this all the time. You got to play around with like the bid, the ask, the mid. I'm not taking less than 10 cents, but I'm going to pay that commissions, which is going to take around my profit. And it filled at 10 cents. All right, so let me take note of that. IWM. That's a 419 expiration. That is a 189 by 188. Full put spread for 10 cents credits. I got to track all this stuff manually for 10 cents credits. All right, and I'm going to take a similar trade. So here, similar. Going to this account. Let's set this one up. Okay, 9732 there. Let me edit, try to get 11 cents if I can sneak it out there. Filled at 11 cents, you sneaky dog, you. All right, let me take a similar trade now. Similar order. This account. Try to get 11 cents out of this one. Fill it. Come on, man. You guys made me take it first and then you fill me at 11 cents. Dirty dogs. All right, so tracking this stuff manually. This one's for 11 cents. Okay. So I want to explain quickly, like, what is the difference? Like, if Nick took a cash secured put, what's the difference? Well, I'm going to take $100 profit for $900 risk, which I know is not great. But if this stock went absolutely to the floor and we dropped to 185 or 180 or 179, I'm defined with my risk. My max loss is $900. That is it. This is a $250,000 account, $185,000 account, $260,000 account. Losing a $900, I can stomach that loss. If I had a naked put at 189 and I'm going to get assigned at 180, I would be upside down. If I did one contract, I'd be upside down. From 189 to 180, I'd be upside down $900 just like that, and I'd be assigned. And you don't really have any recourse, so I just define the risk. Makes my life a lot easier. Okay, I've got a few minutes before I jump into my equities on my trading room, and let's do this. I'll show you the reverse iron condor. Okay, let's go out to another expiration. So I'll do May 17th. So an iron condor is going to be, let me get a stock that has a little bit less movement. Here's a good one. MARA out to April. Okay. So what's nice about this platform here is I can see the expected move. So we've got, it shouldn't really go lower than this price at $15, $16, and it shouldn't really go much higher than $35, $36 over the next 49 days. That is anticipated based on implied volatility and the expected move. All these things matter. Okay. Oil, I'm bullish on oil there. Humble manifest of riches. I'm bullish on oil to $90. I've been buying oil since 71.25. Okay. We are creeping up to that. We're at 510 and change. It's just that low volume drift today, man. Nothing to stop it. The melt up ensues. Okay, so iron condor would be your selling. Okay, that would be this. So look at my strike prices. You see that we start at the low numbers and then go to the high numbers, right? For me, it makes sense, and that's how the broker defines it. I don't know why I do it this way versus some people are like, well, I want the high numbers on top and the low numbers. I get it. I don't know why I do it this way, but I like it this way. Anyway, strike price at 35. If I want to say, all right, an iron condor is I do a bear call spread up here and I do a bull put spread down here. That would allow me to collect income. So if price for the next 49 days goes up a little bit, goes down a little bit, goes up a little bit, goes down a little bit, and just this, and then tests. I mean, if it stays here where it doesn't invalidate these levels, then I can collect income on that. That's an iron condor. It's a range-based strategy where you want price to stay in the middle. Okay. A reverse iron condor is just simply looking for a breakout. And the way that I trade those, so I typically do like the reverse iron condors on earnings plays, which is basically like 2 debit spreads. So if I were to say this, over the next 49 days, if I believe that MARA is not going to be sitting at $25, then I could consider doing a couple of debit spreads. So if we went down, I could do this. I can buy a put at the money around $25 and then sell a 20. That gives me $5 of max profit right there, right? So $5 of max profit. I'd only have to pay $2.60 to get that trade. That's not a bad trade. But if I want to pair that with a long call and a sell call, now I get $5 max profit. This is where, again, probability of profit's pretty high. Shows right here that I've got a 75% chance of profit. That price will exceed 30 or exceed 20, allowing me to pay only $4.16 and still make the net profit of 85 cents, right? So I can still lose on the trade if price stays in the middle, but if it goes below 20 or goes above 30, I can make 85 cents because I'm paying $4.15 and they're $5 spreads. So it's just, I mean, really all options are, it's just math. It's just addition, subtraction. It's pretty simple. It's just knowing the pros and cons of how these trades work, right? So that's not a bad trade. Now, I'm curious if I took this downside a little bit further and I did the 25 by 35 and then the 25 by 15. Now, if price goes $10 higher or lower, it's going to lower my probability quite a bit. I went from 75% to 61% because we need a much bigger move. The implied volatility move is only about $10. So it's right there on the cusp. Okay. But if I'm getting $10 of profit, if it exceeds 15 or exceeds 35, I'm only paying $6.50. So now my profit's $3.50 for a risk of $6.50, right? So that is the reverse iron condor. If I had them at the same strikes like that, that's essentially called a reverse iron butterfly. Stupid names, Very stupid names, right? But serious strategies. Anyone know Schlotsky's back in the day? That was an old like deli. I don't know if that was a Midwest thing. I'm from Michigan back in the day. So Schlotsky's was like pretty good deli sandwiches. Anyway, they said, silly name or funny name, serious sandwich. So funny name, right? Reverse iron condor, reverse iron butterfly, whatever. Who cares? But serious strategy if you know what you're doing. Okay. Sell me your course. Well, you can get the course. You want to jump into the Discord. So before I go today, I'm going to jump over to my equities on my trading room. Just go session to session to session. That's pretty much every day of my week. If you want to join my Discord, I will post that right here. Let me get you my Discord link. So group chat. Make this so it doesn't expire. And generate link. Copy and paste. So this is my Discord. Okay. And that posts. And if you want to jump into the Discord and say hi, love to have you here. And inside my channel, you can see here, I've got all my content in one place. So if you want to check out any courses, you want to check out any robots, check out any trading rooms, it's all here under education. If you'd like to just get right to it and have a crash course with me, jump into this private instruction tab. Like I said, work with individuals, 1 hour, 4 hour workshops, groups of 5, groups of 10, whatever works. You got a group of traders out there that you're friends with and you're trying to get better at trading. If I can help, let me know. So you can check out those links if you want. And that's that. So I'll let you go for today. Equities on Demand students, I will see you in like a minute. I've got 2 cookies and a coffee sitting over there that I'm going to grab. And I'll see you in class in just a couple minutes. All right. A1 Trading Team, thanks a lot for having me this week. Great stuff. And you guys all have a great weekend. All you traders as well. And I will see you later. Bye-bye. Thanks.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. From all of us at A1 Trading, have a great day, and we'll see you next time.